Welcome on board. Talk about what the market construct is looking like, not in the short term, but the slightly medium and longer term. Nilesh Shah, MD at Kotak AMC, joins in on the show right now. Nilesh, hi, good morning. Great to have you on the show. And Nilesh, just everyone's worry today is whether they're going to get home in time or not, because the Prime Minister is visiting and he's going to be inaugurating some mammoth infrastructure projects here. Infra, clearly, Nilesh, is turning out to be the darling theme of the markets as well. What is the best way to play this theme? And would you say that one has missed the bus, or do you think this is a long-haul space you can still catch on?
Thank you, Aisha, for having me over here. Generally, before the election, government increases allocation to infrastructure projects and also puts pressure on execution. This year, thanks to G20 presidency, there is added pressure on completing existing infrastructure projects. All these things is beneficial to infrastructure sector. And previously, we have seen ahead of election cycle, by and large, infrastructure sector does well. This year is no exception. And we believe a broad basket of infrastructure companies comprising of construction and also material companies like cement and pipes put together should be able to outperform market in the coming year.
Nilesh, you think that's going to be the flavor of the budget as well, pretty much? An election budget, higher healthcare, higher infra spend?
Undoubtedly, the markets have very high expectations from the budget. And yesterday in ET, I also wrote an article that market expects finance minister to bet like Surya Kumar Yadav, ball like Umran Malik, and field like Ravindra Jadeja. Undoubtedly, this budget, like last budget, will enhance allocation to infrastructure projects. The budget will also have to look at the poor people and bottom of the pyramid where consumption is slowing down. I also hope to see from budget certain announcements related to containing of trade deficit, which is running at a fairly higher number. Overall, it should be a progressive budget like last time, which pushes India's growth to higher level and at the same time assures investors about path to fiscal prudence.
Good morning. This is Nantara joining in. We all read how you recently talked about how the Indian economy is a oasis in a desert that we're seeing when we look at what's happening with the global economy. But Nilesh Shah, having said that, from a market's point of view, in 2022, when we've also seen India's weightage go up in the MSCI so much, it was a year that belonged to the banks. This year, Nilesh Shah, once again, when we talk about the Indian economy being an oasis in the global economy, will we see those kind of gains again in the banking space, which will be the pivotal and the fulcrum of sorts?
So last year's performance is unlikely to be repeated. As I mentioned, yes, till now Indian economy looks like oasis in the desert, but market is already discounting that. Compared to globe, our valuation is in the higher range. Compared to emerging market, our valuation is in the higher range. And thanks to the rally in China in recent times, some of that gap has narrowed down, but we continue to trade at premium to our own average historic valuation over peers. Compared to our own historic valuation, we are at a higher range. So it will be fair to summarize that all the good news about economy is already discounted by the market. Banking stocks last year witnessed a fair amount of growth led by PSU banks and some private banks. From here onwards, to repeat that performance will be next to impossible. Now, in the market, you never say never, but rationality does indicate that that kind of performance is likely to be not repeated. We will see compounding in banking and financial services space. There are still some undervalued banks which can deliver compounding return, but they are unlikely to deliver multi-bagel return in this year.
So Nilesh, as we all know that good news and good price rarely come together, if ever. So after the year that we've had in 2022, when India continues to be an oasis, but of course has been discounted by the markets, where should one put their money? Give us
So
one or
one
two
thing,
ideas, new ideas.
so one thing which we talked about was infrastructure sector, where ahead of election, increased allocation and speedier execution does benefit this sector. The second sector which generally benefits ahead of election is FMCG. Government puts money in the hands of bottoms of the pyramid. By and large, these people go out and spend rather than save. And host, right from alcohol all the way to consumer staple, does get supported by that increased boost of consumption. So somewhere FMCG does provide an opportunity, keeping in mind May 2024. Two sectors where right now headwinds are negative, IT and pharma. I think over next 3 to 6 months will provide an opportunity to enter. Both these sectors right now are depressed by what's happening globally as well as locally. In IT, hopefully NASDAQ bottoming out will provide support to our IT sector. Normally, we have seen that when inflation peaks out, and in this scenario, when Fed rates will peak out, which is expected by March, April 23, hopefully NASDAQ should bottom out. And that should create a bottoming out process in IT sector. Pharma has been derated after post-COVID rally. They need a catalyst to move. Either it could be in terms of product approval from US, or it could be in terms of US FDA lifting sanctions on factories in India. But somewhere we believe with the valuations becoming fairly reasonable, some catalyst might emerge over next 6 months, putting pharma sector on the up move. So infrastructure, FMCG at current levels, and IT and pharma over next 3 to 6 months could provide an opportunity to outperform market in rest of FY24.
All right, those are a number of sectors. Morning, Nilesh, and wanted to understand your view on the relentless FII selling that we've seen of late for the Indian markets. When do you believe that we're likely to see a reversal, and what do you believe is going to be the key catalyst that will spur that change?
So there are two factors at play on FPI side. The tactical short-term flows are leaving India to go towards cheaper emerging markets like China, Brazil, South Africa, Indonesia. These flows are likely to continue going away from India till such time our valuation gap vis-a-vis our emerging market peers narrow down. There is a counterbalancing force also at play, which is passive flows. As you had mentioned, in MSCI India, MSCI Emerging Market Index, India's weightage is around 15 to 16%. Every 100 rupee coming into emerging market index funds, 15 to 16% gets allocated to India. So today we are seeing two flows into the market, passive funds investing and active funds leaving India because of the valuation differential. As soon as the valuation differential narrows or passive fund flow starts overcoming active outflows, we will see FPI buying emerging.
Okay, fair enough. That's the view coming in on the entire liquidity situation. Nilesh, day after day, we continue to read these headlines when it comes to big tech, the kind of layoffs that we're seeing. But just let's talk about some of the listed entities as well. Nykaa, for instance, has seen an absolute hammering and wealth erosion of late. Some of the market experts seem to be a little bit positive when it comes to Zomato, that this year could be a bit of a turnaround. Any hopes that you have within this entire new age fintech space on the listed side?
So our own experience of investing in new age companies is fairly limited. Like retail investor, we are also learning. Few of the learnings is that one, you have to back the winners because the winner takes away entire spoil. To win this game, you require deep pockets. Either you have money or you should have investors who have money. The third thing, these sectors are likely to witness extremely high volatility. When people turn bearish on them, they will become extremely bearish. And when people turn bullish on them, they will become extremely bullish. As an investor, it will make sense play contra on this if you can find winner and person with a deep pocket. As I mentioned, our own experience of investing in these companies is limited. We are also learning by making gradual and small investments. Hopefully, over a period of time, we will learn the art of investing in new age companies like we have learned old economists. But be ready for extreme volatility in these games. You'll have to play contra to make money in this sector.
Fair point. Nilesh, great to have you on the show. Thanks as always for taking the time out.
Thank you.
Okay, a lot of pearls of wisdom there coming in from Nilesh Shah from Kotak.